What's up, guys? Happy Mondays. Welcome back. It's Monday, October 25th. Got Halloween a few days coming up. Let's check out what's going on. Market was extremely bullish today. Market on closing balance was at $1.2 billion to the buy side. Biden delivers remark on Build Back Better deals. Manufacturing index, it's pretty good, huh? Interesting there. Interesting move there. All right, we also got a lot of earnings for today coming up, so let's check that out. Yo, what's up? What? Nah, chill. Maybe I should have readjusted, but no, if it runs up, we'll still be good. We'll still make money on the call side. It's just that we just need more time on the call side to double the profits. Hey, thanks Hawaiian Beef for subbing for another month. I appreciate you. Thanks for supporting the channel and helping us out. All right, so we got some earnings coming out today. We got Facebook, Crown. Tomorrow we got a bunch of stuff. I was contemplating about doing some spreads on Sherwin-Williams and also Hasbro's, but they're like super like low-key companies, so the spreads are kind of shitty. The volume is kind of bad, so I didn't want to alert it. I kind of wanted to do it, but I took it on my account. I took them on like my bigger account, but I didn't really took them on the challenge account because it would be unfair since I didn't really alert it. But they were pretty interesting there. Today Tesla went crazy, kind of carried the market a lot because so we're streaming this on multiple platforms, and Simon's here asks, is there any news other than the Hertz order on Tesla? I don't think so. I think that was a pretty huge thing because, if any Tesla fanboys is looking at this, Hertz order 1,000, they order 1,000 Teslas. Yo, that must mean one thing, Tesla 1,000. It's a sign, baby. It's a sign. So there's that. That's kind of interesting. What's up, Fiat World? What's going on? Oh, bam. Facebook did end up spiking down. Let's see what's going on here. So they had a great earnings here. And that's kind of what we're looking for on Facebook too. We're looking for a spike down or flatness, especially closer to I think our spread was 280. So we're looking for that move down. Oh no, our spread is actually 300. So we're looking for that move down toward 300, as long as it's like anywhere between 302 to 310 or whatever. We'll make some decent money. If we hold it to Wednesday, we'll even make even more money, and we hold it for Friday in that range. Oh baby, we're gonna get paid. So let's see what they say, man. Let's see if they can stay down that far though. So Facebook Q3 earnings per share $3.22, beat estimate of $3.19. So that's a beat on the margin side in terms of earnings per share. Sales is 29.01 billion as opposed to 29.58. That's a huge miss there in terms of revenue and stuff. They said this is a 34% increase in earnings per share compared to the same period last year. And sales is about 35% increase compared to the same period last year. So pretty in line. They must have either spent a little bit of money or didn't have much growth. What was the price of stock trading last year? Between 280s to like 260s. So to do some quick math, 280s times 1.35 kind of puts the stock around 3.78 if we're just talking about straight up dollars. And in terms of like growth, per for the revenue increase. Kind of undervalued the stock a little bit. 2226. If we compare it to like last year in terms of the growth, that would put it around the 305 range though. So it could potentially be somewhere between 305 to 370s, depending on how we value it from the beginning of the year, to the exact same period that year. They reported daily active user growth, or daily active user at 1.93 billion, up 6% year over year. Monthly active user is at 2.91 billion, up 6% year over year as well. Oh, this is where it's gonna be ugly for them. It's coming back up a little bit. It says they see that Q4 total sales is gonna be between 31.5 to 34 billion, as opposed to 34.89 billion estimate, which means that they don't think their sales is gonna hit the estimate for next quarter as well, and they're expecting a weaker season. Facebook says our outlook reflects the significant uncertainty we face in the fourth quarter in light of continued headwind from Apple's iOS 14 changes and macroeconomics and COVID-related factors. Interesting. Hey, what's up, Fiat World? What's going on? Wagers and hash. Young Bull. Looks like the hedge fund perfectly drew up a lot of interest pre-market on the Trump SPACs just to dump on everyone that opened. That's true, possibly. I mean, there was definitely some dumping. Where did we hit in pre-market? It looks like we hit like around 120 pre-market on that Trump SPAC, and we're closing around $80. I think it still has opportunity to run because I think they just have so little shares. Unless that company comes out and says they issue shares, I think it still has potential to run further because it's in another way a short squeeze, a pretty big one at it too. What's up? What's up, Patron? Ah, dang, man. Facebook with the share repurchase. Digging a little bit further into it, let me see. So we read this already. The increase is pretty weak, only about 6% year over year. Capital expenditure, they repurchased 14.37 billion of stock in third quarter and had 7.97 billion remaining. We also announced today that a 50 billion increase in the share repurchase authorization. Oh, damn. So they're running out of money to buy their own stock, and they just authorized another 50 billion to pick up to like artificially inflate the stock again. Let me see, what's the market cap at? 957, 958. It's like 5%. Pretty bullish, actually. So share repurchase is usually a pretty good thing. Share repurchase is a pretty good thing because the company is gonna buy back their own stock, which in other words, it's like where they're gonna. It's like when they think the stock price is low, they're just gonna come swoop in and buy up artificially themselves, which is gonna create demand. So that's gonna be a pretty interesting thing. And usually that makes the stock run up further. So that's why, Buzzer just said, like, that's why Buzzer mentioned it, because that's something we usually look for in these earnings reports, because those are pretty relevant in a way. Because if we see something like that, like Fiat World says, it creates a floor. It pretty much signals to the investor like, yo, we're gonna buy it. So you buy with us. But the outlooks are pretty ugly though here. Starting with our results for the fourth quarter, we plan to break out Facebook Reality Labs FRL as a separate reporting segment. So we have discussed with dedicating significant resource to our augmented and virtual reality products and services. What are an important part of network? Our work to develop next gen of social online experience. Dude, this is pretty big. So Facebook is going deeper into the AR stuff. So they're gonna break that into one separate segment. So they must either think like that segment is gonna make a lot of money or it's gonna burn a lot of money. So they think in 2021 it's going to burn a lot of money. That's why they're breaking it. Like they're still gonna report it, but they're just gonna report it like separate a little bit so people know that the other services between Facebook, Instagram, Messenger, and WhatsApp and the other smaller services are making money, whereas Facebook Reality Labs aren't making money, apparently. So compared to last year, they did pretty good. Net income is up a lot in the 9 months from 2021 here compared to 2020 of last year. So 9-month net income is like 29 million, I think, or 29 billion. EPS is a lot as well, 10.27 as opposed to 6.29. So they're definitely doing better than last year, and they definitely deserve to be like higher priced than last year. So overall, still pretty bullish on Facebook on a longer term basis. So let's check it out. So let's say we priced them last year around like 280, 290s, right? Somewhere between this this whole 245 to like $300 range, and they're making like 1.35 increase. I think they're worth a lot. Like they could easily be valued 350 plus, easily. So overall, pretty bullish on Facebook going to longer term. That's why we also have the other play too. Like just in case they drop that short-term move, I think like longer term, like 2 more weeks out, like 11 days out, I think they're bullish, because obviously if Facebook is bullish, it should easily reclaim that 340 level. So if it's like within that 340 level range, this spread was only $85. You guys might even gotten it cheaper today, but if it reclaims that 340 range, right? Let's say by this Friday it reclaims the 340 range, you make up $100. That's already enough to pay for the loss of the other spread. And then if like, if we claims like 350 range by next Friday, it's gonna turn $85 to $300 and something plus profit. That means it'll be $400 and something. So that's enough to pay for this play and the other play. So that's gonna be a pretty good growth there. That's like 300-400% increase. So based on that earnings, I think that could be a possible move. Even though they missed it, they guided pretty weak, could probably chop this week. So that's why we bought time. We just needed to be between 335 to 340s for that bullish side to play out. For the bearish side, I'll see how it moves tomorrow, but if we could hit 320s tomorrow or anytime, we're probably gonna close that bearish side. So the bearish side, unless we're above 330, we should be okay. So if we should be able to just get out of it without even losing money, we should be able to get out break even. If you can get out break even on the bearish side, Try to do it, because that share we purchased is nothing to play around with. Let me check back in the comments. Took some extreme calendars, how YB says. Oh, it doesn't cover your link that well, man. Where you put 360s. Makes sense. I mean, I hope it works out. Good luck with that, man. It's pretty cheap. Hell, we even do 350s, man. But how much is 360s? $15. Damn, that's dirt cheap. That's dirt cheap, man. Dirt cheap. So Fiat World, he says he thinks that 310 to 320 is probably the floor. I agree. I think like even 300 is the floor. Like, I think if it ever goes to like 300, that's a huge buying opportunity. Oh, our playlist is strictly just from the app that we're using to stream, so I don't even have access to that playlist. Let's check out some of the other earnings, yo. Let's see what else is going on. Home Street also reported, what is this? Commercial Bank. Earnings per share 1.31, that's supposed to 1.11. Book value at 33.18 a share. So stock is at 44. No interest there. Canvas Design System. Wait, who's investing into data center? Canvas Design System Q3 earnings per share is 80 cents, up to 75. Sales is 751 as opposed to 743. Guidance is pretty strong, 745 to 765 as opposed to 746. Earnings per share is 76 to 80 as opposed to 7.75. No movement after hour, but if I was looking at this company, actually they ran a lot compared to last year. Last year stock was trading at 110 to 167, almost a 50% increase. Never mind. It was good earnings, but it's pretty in line, if not a little bit more. iPart also reported earnings today as well. Oh no, they raised guidance. And net sales is $262 million as opposed to 160 year over year. 63% increase compared to last year. Ever since COVID was over, people buying perfume back to back over and over again. Just kidding. So hitting a quad top over here, almost around $80 range. Let's see if they can break it. They think full year 21 sales is gonna hit around 810 million as opposed to 771. Earnings per share is 2035 as opposed to 1.95. Pretty good there. They think they're gonna, hit some good numbers this year. What's up, Roman? From the YouTube side. I think Neo is gonna be pretty bullish considering how Tesla's bullish. Record numbers from Tesla and everything. So we could potentially see some of these other EV stocks run back to all-time highs. Last week we played some. We talked about Lucid, LCID, and we played some of that. So that was, in terms of like Tesla run up, but I honestly could not have anticipated Tesla going to 1,000. I thought it was going to have a little pullback because Tesla was so overextended already. But I think Tesla is at a point where it is like, it's just so much FOMO, man. A lot of people are buying it. And it's going to get to a point where people are going to buy it. And it's going to be buying the top a little bit, man. So I thought last time I was looking at Lucid, I thought it was going to come back to 27.94. I think it kind of hit that today. I could be wrong. Let me see. We hit 27.40 today. Didn't hit 27.94. Might still have a little bit more room to run. I don't see why not, honestly, based on how bullish Tesla was today. Let me make a copy of this and duplicate this. This is the week of 25th. Let me clean out all this. So in case later on, we're going to look through the earnings. If we have any stocks that, we want to go over, you guys could let me know in this chat and I'll take a look at it. Can you talk about your Facebook challenge and your strategy? Hey, what's up, G Money? We did talk a little bit about it. If you go back to the beginning of the video, you probably hear it. BKKT. What's up with this stock? So let me see what else we reported after hours. Oh, we got AXTA also reported after hours. So if you guys were following the Option Swing channel, I said a little bit about Hasbro and AXTA. AXTA is kind of part of the coding industry. They market and distribute performance coding and transportation coding system. Operates in two segments. The performance coding segment, which is the key revenue driver, provides liquid and powder coding solutions to fragmented and local customer base. Its end market include refinish industrials. The transportation coding segment relates to the provision of coding technology to original equipment manufacturers of light and commercial vehicles. So they just reported as well. Earnings per share was 39 cents as opposed to 34 cents. That's a beat there. Sales is 1.09 billion. Miss estimate by a little bit at 1.110. 33% decrease in earnings compared to last year. Must be because of margin increase. Margin hit. And then this is a 6% increase only in sales compared to last year. So company was trading around $24, $26 last year. Right now it's trading at 32. Almost seems a little bit overvalued based on it has almost not much increase compared to last year. Looking at pre-COVID prices, it's trading pretty in line around that $30 range. However, they think full year 21, they think they're going to see about 19 year-over-year growth. Earnings per share $1.70 to $1.80 as opposed to 182 estimate. So they still think that they're going to get hit with margin issues, but overall sales, they think they're going to see 19% growth. So if company, was at 31.20 last year, and they get like a 19% growth, could potentially put this stock up to 37 if supply chain issue doesn't become a big thing. Let me read up on this a little bit. Twitter, I got you. So we'll add Twitter on there as well. Partnership with MasterCard for BKKT. I see. That's true, and you know what? It can move either direction. It can go sub 1,000 real quick too, just as quickly. Robust pricing to offset persistent inflation. Strong operating execution while supply chain challenges continue to impact results. Net sales increase of 6% year over year with substantial growth of 14% for performance coding. You can see the hit in terms of income from operations. What's up, Aubrey Nickel? How you doing? Completed share repurchase of 90 million. So they've been buying themselves up. I'm surprised the stock isn't moving actually, based on all the stuff they're doing. They're saying like supply chain is affecting them, but I'm not seeing price get hit by that as much. That's pretty cool, man. Thanks for being a yearly member. We could take a look at Snapchat as well. Why not? So that's pretty interesting. Not much movement after hour. Hoping to see the same thing for SHW tomorrow. I think that's pretty much all for all the earnings today. I didn't see anything interesting else that I want to check out, unless you guys have another earnings that you want to see after hour. After hour for today. Gonna dig into some of the earnings from this morning that I like, of the companies that I like. This Popeyes company, QSR, Restaurant Brands, reported today. Let's see what they said. Earnings per share 76 cents as opposed to 74 cents. Sales is 1.5 billion, missed 1.52. 11% increase compared to last year. 11% increase in sales compared to last year as well. In sales and EPS. So pre-COVID, company was trading at 67. Last year, company was trading at 56, coming back pretty close to that same price as last year. So might be somewhat of a slight buying opportunity here. Let's check out this earnings report. Why they dropped so much today? Global system-wide sales grew 11% and accelerated sequentially to 5% compared to 2019. So they did better than they did in 2019, right? The Burger King international sales are up 25%, up 10% compared to 2019. Year-to-date unit growth pipeline keep RBI on track to return to pre-pandemic level in 2021 and accelerate in 2022. So they think 2022 is going to be a good year for them. They returned over $425 million through dividend and share buyback to shareholders. Announced commitment to reduce greenhouse gas emission by 50% by 2030. A lot of good things. I don't see why they aren't bullish. They recently expanded 1 billion share repurchase program during this quarter. We returned over 425 million, and we purchased 180 million of common stocks, reflecting the confidence we have in the long-term outlook and intrinsic value of our scalable business. So our big goal is to drive business growth without carbon growth. I'm so proud of the team's work to set ambitious goals to reduce our carbon footprint in the world. We have exciting and important sustainability projects underway across the company in green building standards, packaging, recycling, growing our charitable foundations, and doing hard work with our suppliers and franchisees to improve the environment footprints we have in the world. I think it looks overall pretty good, man. I'm not sure why the stock dropped so much today. It looks almost like a buying opportunity. majority of 90% plus their restaurants are open, even through pandemic times. Sorry guys, I'll catch up in the comment a little bit. Just reading through this real quick. Everything looks really good, man. Because this is one of the companies I have invested long term as well, and I've been buying them like the last few months, dollar cost averaging in a little bit. I'll probably continue to dollar cost averaging again tomorrow, because that report was overall pretty good. It dropped from 63 back to 59s, so I'll probably continue to add a little bit more position. I honestly don't see why not after reading that report. And if they come back to like even $52 range, welcome. I welcome more of it in my portfolio. But no, it's I like them because I like fried chicken and Popeyes, man, and I'm like, yo, why not, right? You gotta invest in things you love, invest in things you know. And like, I see so many Popeyes restaurant opening up, so I'm pretty confident the company is gonna continue to grow. Like, they're like popping out non-stop, man. It's just so convenient. I don't see why people aren't buying this stock. But that's also because, like, if they had just changed their name to POP or something to stand for Popeyes, I guarantee you people would probably buy more of it. But this company, Restaurants Brand, actually owns 3 different companies. They own like Tim Horton, which is a coffee competitor to Starbucks in Canada, and they own like Burger King's, and they also own Popeyes, and I think they own like KFC worldwide. I could be wrong. Feel like they did. Kimberly-Clark also reported earnings today. Earnings per share is $1.62 as opposed to $1.65. Sales is $5.01 billion, beat estimate 4.99, 5% decrease compared to last year, and 7% decrease almost in sales compared to last year. They continue to cut guidance for full year 2021. They think previously they thought they were going to make about $6.65 to $6.90 to $6 to $6.25 now. Huge decrease in guidance there, as opposed to $6.70 estimate, and they already reduced the guidance like 2-3 times, if I remember correctly, from the other earnings reports, because they're saying there's higher input costs due to inflation. So apparently, yo, toilet paper price is about to go up, boys. You guys better start buying that. Load it up. So Kimberly-Clark makes Huggies, Pull-Ups, Kotex, Depends, Kleenex, Catelli. I'm not sure how you say that. And you know, all the other stuff. They make a bunch of brands, man, like from like female pads to baby and wipes. Bidet is the way. Yo, I need to get somebody to help me install like a super expensive bidet in my bathroom. Honestly, low-key, I've been wanting a bidet for a while. Nothing beats the feeling of squirting water up your butt, right, Spindle? Right? Damn, what the hell? How many of you guys have bidets? Let me catch up in the comments. So AMCX. What else we got? SQ had a quiet move today. DWAC. Of course, right? We got to take a look at DWAC. How could we not? US. What's up, Darius? Monster. Why not? My favorite brand. GEVO. Should we give you the WAP today? Yeah. Let's go. Total WallSt? What's that? Total. Ooh, heated seats. Hits just right. How easy is this to install? Can you install it yourself? iHeartRadio. What? Your bidet has a fan as well? What the hell? Damn, that's fancy, man. Blow air up your ass at the same time? Jeez. I remember one time I went to eat at this Asian restaurant in Maryland, and for some reason they had a bidet in their bathroom, right? And I remember using it for the first time because I never used it before, and their water wasn't heated. It was like super cold, man. And I remember like accidentally like pressing the button, not even know what's gonna happen, and just like it just shot water at my balls, man. I was like, eeh! And I almost jumped through the door. BKKT. That kind of gave me a fear of bidets for a while. I'm not gonna lie. Moved up a lot today from like $9 to $34. But this was like earlier days. Like I'm talking about probably when bidets wasn't even like popular enough to like. I think it used to cost $2,000 back in the day. Like I think it was probably like in my like maybe like young 20s or maybe even sub 20s, man. I might have been like 20 or even 19 at that time when that happened to me. I just remember it's just always thinking about that restaurant. I went to like that restaurant 3 times in my life, and like every time I visit my family, like that's like the only like restaurant that's like big and stuff, and we would go to it and just like, man, it's just always reminding me of that one time that I got jumped by the bidet. BKKT. Damn, for real? That's pretty cool, dude. How much is Hugh Hefner's house for rent? Is this before Airbnbs? So it looks like BKKT is like another spec stock. They just opened. The share just got opened on the market. It's usually valued at $10. It spiked to almost $30. This is a humongous run. What's the update? It says MasterCard partnered with this company to provide easier access to cryptocurrency payments. Under the agreement, the company will issue cryptocurrency-based debit cards and credit cards. Yo, you know, they actually used to do this. There was a card that did this, and I forgot what happened. I think New York shut it down or something. But I remember one of my dumb friends used to like. He was one of the first persons to adapt. He was like, "Yo, you heard about Bitcoin?" This was like back in 2017, 2018. He's like, "Yo, you heard about Bitcoin? I got this Bitcoin credit card, man." I think the company was, the name was like S or something. It started with an S, and it had the credit card. And man, he was so excited. And then the company just got wiped or something. It just disappeared from existence because I didn't think they made it illegal. But if you guys are thinking about buying this stock to invest in crypto, or into the credit card, space, I don't think it's a good idea. It looks like it ran a lot. If you guys were one of the early things before this run, great. But I think once it lose steam, it's gonna be an ugly backhole. Like, it might take you forever to unleash this. So in my opinion, I definitely think it's kind of risky dicky. But to each their own. It is on the upward momentum right now. If you do want to like try to start a position, I mean, you could try to see if it gets a pullback to like maybe 23s for a dead cat bounce. But other than that, I probably wouldn't want to touch it. I think a lot of these are going to end up being pump and dumps, and then it's going to go down. There's so many other places to make money from, man. Don't try to get rich quick. We're not here to play scratch cards. Like we're not, we're not here to like go one and done. Nice, RB Nickel. Good stuff, bro. Good stuff. I mean, I like the company. If it comes down a lot more to like the sub 20s, I might play it. But if you guys want to play crypto, there's so many crypto stocks to play, right? You have HUT, you have Riot, right? You have Mara, right? You have so many crypto stocks to play. Like, why go risky dicky on that one? There's so many other crypto stocks. You even have Coinbase, and I think Coinbase can hit like 400s. This is coming from a Coinbase bear. That's true. That's true, Fiat World. We are a little degen, but I mean, I like DWAC for the short squeeze, but I think this is a whole nother thing. I think this is a fake short squeeze. Let's check out Twitter. So Twitter also has earnings this week as well. I was kind of tempted to make a play on Twitter to the bearish side because I could kind of see this bearish trend line play out a little bit. If we continue to move back down, we can continue to cut to the $55 range. But I think I'm gonna wait for earnings. Well, at first I also wanted to see how Facebook played out, and I know that Twitter is also on its path to trying to break into profitability. So I'm also kind of bullish on Twitter in that sense as well, because they're finally at a point where they're like trying to make money selling other miscellaneous stuff in their services and things like that. They got this whole revenue model going on, and they're trying to make it happen. But I'm gonna wait till after earnings to see what they say, and if that's indeed true, I could see them coming back to 70s. But short-term resistance over here. So I'm not gonna make a decision on that. I'm gonna wait a little bit. I'm overall bullish long term. Me personally, I'm gonna wait till after ER. Yes, Coinbase did print today. It was sexy. What did Coinbase close at today? I didn't even see. Oh, 325, baby. Yo, look at that trend line. So sick. So I think we drew this trend line like last week, looking at that 293. I actually got in around 305 range because I was having so much FOMO. I think I got in on that first red candle down. Somewhere in that range, the first red candle down. And just kind of diamond handed because I'm extremely bullish on Coinbase because they said that they do get into NFT market, and NFT market is like, it's like a whole nother thing, right? It's like gonna be the biggest revenue driver for them. And if the company stock was IPO'd at like around 360s prior to that NFT market, the NFT market can easily drive the stock up another 50+%, even 100% from these low levels. So 200s to 400s, I don't see why not. So Snapchat actually reported earnings the other day. I think they said that they were going to take a big hit due to that earnings with the whole privacy thing. It was looking kind of bearish, so they came down a lot. We also did the math. We looked at all their previous earnings and financials and stuff like that. Essentially, I think their value around $57. I think that's where they'd be close to in terms of like, quick math based on all these earning increases. But if they do continue to come back down a little bit more, I am gonna set up an alert here and the lower levels to buy the dip. So let me see. So this level would be at the $49, $50 levels. If they do hit that level, that's a huge buy the dip area. But right now, they got some, bearish news. So that's on Snapchat. And then for those of you guys that are new and you haven't had that link to the spreadsheet, this is the same spreadsheet we're using compared to the 2K challenge as well. But I'm gonna paste it here too in case you guys need it. So next stock on the list is AMCX. Isn't AMCX just AMC as well? AMC Networks. Yes, we do. We do like risky, picky stuff. Smart move, man. Congratulations. I don't know. iHeartRadio is kind of like, a low stock. Like there's not a lot of familiarity with it. Not a lot of people are aware of it. So it might be a little bit risky. We'll take a look at it. It's almost there. Google seems to also like this Facebook earnings is up 1% right now. I guess the fangs are bullish. So AMC chart got a little bit bearish pattern going on. Triangle pattern is failing to hold. Looking like we're kind of breaking under a little bit. I did see a report this morning that IMAX actually reported a pretty good quarter too. What level should you buy? I mean, at this point right now, it's losing this level. I wouldn't buy unless it reclaims that level there, right? So this level is the 43.90, let's say 44. I wouldn't buy unless it reclaims 44 for the move up. Otherwise, I think it could potentially go back to 35s. And keep in mind, just because it has good financials, like what's good financials, right? Compared to all the money they lost in these quarters. So I would say support is at 34. Let's say 34.50, so round it up. That's the next support. AMCX. So AMC Network owns all the companies and whatnot. I think we got a rejection on ES just now. Maybe. I mean, yeah, you could say like their PE is good, but their revenue growth hasn't been great. Earnings per share growth has been on a decline, so they're making less and less money. Actually, they didn't get hit by COVID that hard. They haven't been making a lot of money either, so they didn't get hit by COVID that hard, and everybody was watching like TV last year and they couldn't beat their 2019 numbers compared to their 2020 numbers. I don't know what's up with that, man. They can't even beat the 2019 numbers with how great things were going in COVID, and that's tough, right? So in 2019, company was traded around $65. End of 2019, they hit like 36, and then they went as low as $19. But then the AMC pump kind of brought them back to life to the 80s. So I mean, I think like this $34 range, they could be okay if maybe they'll have a growth strategy and they do a turnaround. You know what I mean? So there's possibility, but definitely at this level it could be good. But at the current price right now, you're gonna have to assume that they're gonna do better than 2019 on that next earnings. You know, like that next earnings gotta like pop off. And right now is looking like this earnings is pretty weak. So give it some time. Give it some time. See how things come out. And obviously, if it comes to like $21 levels, even better, right? If we're just looking at it straight up from like the fundamental perspective, I don't know if you understand what I was talking about there. Like we're looking at the 12 months that end in 2020 versus 12 months ended in 2019, and you can see the revenue got lower, the gross profit got lower, and I think their best show was probably The Walking Dead, and that's coming to an end as well too. I think, or maybe it already came to an end, and even their like spinoff are coming to the end, and that was probably one of the best drivers for them too as well. DWAC next. Let's check that out. So DWAC, new stock. I just popped onto my Bollinger Band. Looks like we came back down to the band here. I have $82 and change. Had a nice bounce off here. We could potentially move back up to 87s or even 91s. As long as we continue to hold this double bottom range, might be pretty good. Might be pretty good. So 30 seconds. I like that meme short-term support there. 82.50. Let me post it to the sheet. So you guys can, if you scalp it, look to take profit around 87s or 91. So the indicator we're using on that is called the Bollinger Bands. I pasted it. Let's see. Next one is QS. Let's take a look at that real quick. Do I have IR radio here? 3 more stocks. QS is also making a nice move up. Somewhat of a double bottom setup here. Could potentially move up to 27, 28. Based on the way it's moving, I think the whole EV sector could potentially get hot here. We could see a whole nother run. As long as Tesla remains bullish, I think all these EV stocks are going to be pretty bullish. We got that nice double bottom set up right there, and bounce off that moving average as well in the yellow line. So good move. And they got earnings coming up to 26, which is tomorrow. So a little risky dicky though. ER tomorrow. Setup looks like a double bottom, but it could invalidate. So it really depends on what the earnings says. As long as the earnings is like positive to semi-bullish, I think it can move up. But if the earnings is bad, obviously that double bottom setup is going to get invalidated. We might even get a triple test, coming back to 22s from 25s. No problem, man. I got you. Next one up is Monster Energy. Monster Beverage. Been on this crazy downtrend, eh? My boy Tommy always finding these value stocks, yo. Good stuff. So it looks like we're hitting that long-term support. We got a little bit bounce here before. And then we got pre-COVID levels. They have earnings coming up in like 10-15 days. Got earnings coming up 15 days. Let me see. I think last earning was pretty bullish. This earning, they're looking to make 67 EPS. Last earning was 75 EPS. They've been doing good, yo. I think, let me see. Yeah, all their earnings have been doing good. 33% increase compared to the same period the year before. 17, 10. So let's say they average about 15% increase year over year. Stock price in 2020 was at $70. $70 at average of 15% increase. Should put them around 80s. So I think this area could be an interesting area to watch out for if it bounce. We could see a good move to the upside. If it comes back to like any range between 70 to 77, I think that's a good buying opportunity there. Could see a bounce here too though, depending on the direction of the market and how bullish the market is. But if we were to compare it to like Pepsi or Coca-Cola, they had a pretty good earnings. If we were looking at like sector performance, those two companies just came out with earnings like I think like 2-3 weeks ago, and their earnings was pretty decent. They saw growth year over year, so there could be potential for a nice bounce there. I like it. I would say support at 84 and 77. So look for bounce there. Next up is GEVO. What do you think, Tommy? You picking it up? Yes, sir. Yo, Tommy's a pro at buying the dip on these good stocks. Yo, one stock I would not pick up though is Kimberly-Clark's because they actually gonna decelerate compared to 2019 and 2020. GVO support at 530s, resistance 720, 765. All right, we're at iHeartRadio. So coming down to that double bottom right here a little bit. what is that? 2078. Prior to COVID, company was trading around 18s. So let me label that. Pre-COVID levels. I like to label a lot of these stocks in pre-COVID levels because that's where I think a lot of these companies, as long as they're operating decently and they haven't lost a lot of money, I think those are like reasonable levels to buy the dip on them based on, you know, inflation and everything going up. So that's at the 18s, and then we got this, draw this other trend line as well. So last earnings, they flopped pretty hard. Let me look at it from the Bazinga side. And why'd you guys want PG to go down? Why'd you guys want PG to go down, man? That's evil. So iHeartRadio actually hasn't been doing that good year over year. They've been decelerating a little bit compared to 2017, 2018, and 2019. They obviously peaked a while back, and so even 2020 sales is 1 billion. Later 2020 it started to decline a little bit. So where are the numbers they gotta beat? So for the November numbers, this is probably one of the weaker quarters. So hopefully they can beat that number, because that is only at 744 million. Let me see what their guidance is over here. 914. So this should be a great quarter for them. And if they do excel that, and they do like end up having a really good quarter here, they could easily come back to that $24 range. It's a good buy the dip area. Facts. We need to go down to buy the dip. Ooh. Hungry ass. Do people even use this? Is this even such a thing? Yeah, I think a lot of their money is from advertising, radio, ad festivals. So I think it's kind of like they gotta like wait for COVID to come back, and they'll generate more hype. But I mean, their apps are pretty decent. I do think that they did a good job with that, and they were able to like, you know, make radio go like nationwide and things like that. And they definitely like gave a lot of competition to like Spotify as well. It's iffy. I mean, I think a lot of people that drive to work listen to it a lot, but their money isn't directly from the app. It's mostly from the advertisement of the older shows. I see them as a marketing and advertising company, actually, instead of like a radio company. Yeah, I remember when they did come out with the app back in the day, though, for the phones. It was pretty dope. Skills. I wonder who asked for skills. So scale is coming back all the way to what's this? Your chicken? So scale has came back to like they're like almost like their pre-IPO levels or their special acquisition levels. It actually just hit the resistance here. Last time it hit this moving average resistance, it got smacked and it went down a little bit here. So I don't know. I don't know. I don't know. They have earnings coming up. All right, so this chart here, when was this? Like when I say like if you believe, you gotta do it. If you believe it long term, all you gotta do is dollar cost average down. Is that what it was? On this chart with all my technical indicators and stuff, it's literally pointing a rejection here. It's saying it's bearish unless we break above and we close above 1086. Did we close above 1086? We did. We closed at 1109. So it was kind of bearish at that. But above a close above 1086 is pretty bullish. But if it comes back and it closed back under 1086, I probably like unload the positions. So right now is it's looking like it could potentially break through. If it does break through, next level we're looking for is like 1390s. So and that kind of correlates with this other level here. It's confluence right here. So we got that correlation from here, and we got that correlation from here. So I think if we continue to open above $11 tomorrow, we could potentially hit here for another rejection down, like it kind of did over here. So if you're already in the profit, look to take profit at that next range, and have a stop loss at like 1080s or under. That's what the charts are telling me. Because like the RSI is extremely hot, the money flow is extremely hot, and sometimes hot is a good thing, but when it gets too hot, it's gotta cool down, and it's almost like climaxing. Once you climax, that's it. Gotta unload, bro. Are we talking about fundamentals here, man? What is the skill company? What is the skill company? I think we're talking about fundamental here. Take a look at the skills company, man. What does the company even do? Hawaiian Beef, what does the company even do? Skills is a mobile game development company. Its platform helps developers build multi-million-dollar franchises by enabling social competition in their game. Wow, that sounds interesting. Let me check the website. Oh, so it looks like they got some interesting games. They got bowling. What is this? Some hex game, solitary, dominoes, pool. What is this? Bingo. 2-minute football. This is like the kind of game I played when I was a kid. So this was October 21st. They named the former Amazon executive as Chief Product Officer to drive the future of mobile gaming. Very interesting. This is probably what started that bullish reversal a few days ago when they named this guy. He was most recently served as the general manager and director of game tech for Amazon's AWS service. I mean, I think Amazon has such a good name that anybody that comes from them, it could drive the stock up. He's definitely not no CFO. He's on the game side as well, which is good because you wouldn't want a CFO from Amazon to run the game side of the business anyways. But at the same time, I think Amazon had released games before, and it was like a huge flop too. So if this guy was like the previous game tech for Amazon, and he was in charge of those games that became a flop, I can see why he was an executive as well, though. It's pretty interesting. I mean, it could go either direction, especially with all the SPAC run up. We could have some huge moves. Next level is 13s, and we could potentially come back to $21 levels. The New World is good, but he's not the one that in charge of making New World though. So they had to replace him, and the other person that replaced him was the one that did New World. We'll have to see. I highly doubt it. Or you can say it took 5 years because he did such a bad job with it. You know what I mean? But I don't think their fundamentals are that good though. I think their fundamentals are pretty ugly if I remember that correctly. Because the last time I looked at their fundamentals, it was like draining money. because a lot of specs has a 5-year growth plan, and their 5-year growth plan is already priced in at $10. And like, we're talking about a company that's like 3.7 billion market cap. It's only making like, full year sales of 300 million. Interesting stuff there. Not too crazy about it, but that's the technical analysis here. I think if we can remain above 11, we should be able to hit 13, 14s. Let's check out Peloton. Peloton's been making a nice move up. We charted this from the double bottom last time. What was this? 8150 area. Pretty good entry if anybody got in from that bottom there. Obviously, it was a pretty scary entry at that time because market was kind of dropping. But it looks like we're good reversal from there. From that May support, ideal price target I said was 94s, 101 and 108. I think that's still pretty valid, pretty valid there. So the notes are already here. Nothing else to say. DLPN, let's check that out. Dolphin Entertainment. Think they ran up because of NFT stuff. I don't know if the deal broke down though. They've been doing some offerings. I mean, I guess at the end of the day, I could make a beer analysis on anything if I want to. But like, well, like, I mean, like, what scales, right? What do you compare this to? What are some other stocks in that sector? Like, how do you feel? How the scales compared to like Zanga, right? Like, was it Z? What was that other company? ZYNA? I don't even remember, man. I don't remember how you spell it. ZYNGA? How's this company doing, man? Shit. Surprise is still around. How does it compare to them? Well, I mean, they used to have their game on Facebook, right? And even that couldn't kick them off to like new highs. What's up with that? Then you have like the other one. There was another one that got bought out by somebody else though. I can't remember the name right now. There's another company that makes mobile games, and they actually got bought out. So God bless them, man. God bless the shareholder for them. But a lot of these mobile game companies, they've been dropping for a long time. Just because it's extremely hard to grow, their profit margin isn't crazy, and like you would think those gotcha things are making them a lot of money, but I don't know. I think they're just paying themselves a lot of money. Like the CEOs and stuff are just ciphering the money to themselves a lot. The LPN. All Alright, so this is the last tick. I'm gonna end it here. ELPN. It's pretty interesting here. $11 could be a buy the dip level. 1060 to 11 could be a buy the dip level. That's pretty much it for today. Let me share the spreadsheet again in case you guys don't have access to it. How's Facebook doing right now? Oh, you already been holding the LPN at $10? Nice. Facebook is trading at 335 after hours. All right, so watch out for Facebook if it comes back down. If it comes back down tomorrow, we're gonna unload. We'll hold the call side until next week based on how good the report was. But look to unload the put side tomorrow. But that's it, guys. Have a good day. We'll be back tomorrow at 4 p.m. to go over more earnings reports.